M&A is about regenerating companies and creating growth and creating opportunities and jobs. But if you 10 years ago looked at how books were sold, you would not have thought that Kindle was actually going to completely transform. If you thought about, remember Blockbuster when you used to have the VHS and some in antiques, so you could, you'd go and you read those things and you'd put them in and say, oh, it's a cash flow machine. It disappeared. How about we go back further? Look at Kodak. Kodak had every opportunity to be the leader in digital, and it missed it. It didn't do M&A when it needed to. And that's not just the question, or research and development. It's not just a question of huge M&A when we talk about it, although that's what bankers tend to focus on. It's barbell, which is what I'd call distributed research and development, the entrepreneurial venture capital firms that actually create new technologies. And the only way we're ever going to get liftoff economically is if we can get technology to give us greater productivity, and greater productivity will give us ability to move revenues, push wages. That's where we need to get
But
to.
I guess a disappointment long-term, Barbara, when we're looking at corporate America right now, they're spending more time buying back shares than doing anything else. Where's the real value created there?
That's a really interesting point, because when the cost of capital is 0 to 25% in terms of cash, the largest single buyer actually of stock has been corporations buying back stock. They're decapitalizing, and that's driving on earnings growth. So I think that tells you is where do I buy? But you've got big M&A and share repurchase. So you're trying to balance capital allocation with current total return to shareholders and growth. And that's what they're doing.
But this is an important point that people don't focus on. To some extent, when you buy back shares, you're sort of admitting you have no better idea what to do with the cash, that I can't find something to buy that will actually enhance shareholder value.
Institutional shareholders are looking for total return right now. If the fixed income allocation, especially if rates they think might go up, they're looking for total return. So you'll see that the dividend stocks have performed well, and people look at, institutional shareholders look at dividend and share repurchase effectively as the same thing economically. But I agree. I think that you can be rewarded for doing a smart transaction, size, scale, scope of business that gives you the opportunity to grow, and that managements actually exist in order to be able to grow asset bases. And you can see that when companies are doing that, they trade at a much higher multiple.